What is the alternative method for accounting for prepayments? If you're not sure, you've come to the right place because I'm Professor Capko, and in this video, I'm going to show you easily how to account for prepayments using the alternative method. But first, I want to say something wonderful is about to happen for you, so be on the lookout for it. And now, back to the video. In this problem, we're going to talk about alternative methods for accounting for prepayments. Prepayments, of course, are when an entity, a company, prepays for something. Maybe in this case, it's insurance. They've bought 12 months worth of insurance and they paid up front for it. There could be other things that are prepaid rent, all sorts of things a company might pay in advance for. And there's different ways to account for it. The usual method usually involves only putting all the amount that was prepaid into a asset account called prepaid, whatever that item is, and then expensing it from time to time. I made a video showing that method and it's linked up here. You may want to take a look at that after this video so you know that method. That is somewhat more common method. This is another method. This is called the alternative method, and we're going to walk our way through it. Here we say that ABC Inc. uses the alternative method of accounting for prepayments. It purchased a 12-month insurance policy for $2,400. The company immediately debited the insurance expense account. By the end of the period, $400 of the insurance has expired. What adjustment must be made at the end of the period? Let's take a look at that. I like to use T accounts first to show these transactions. I'm going to start first with cash, and we're going to have an account here. Let's get this to focus. We have an account here called prepaid insurance. And that, of course, is an asset account. And then I have an account here called insurance expense. If you're not sure about whether an account is an asset, liability, or owner's equity, I've got a video up here that shows the difference of it. You might want to take a look at that when you're done with this video. Insurance expense. Of course, insurance expense is an income statement item, whereas the cash and the prepaid insurance are balance sheet items. So we're going to use these T accounts to demonstrate how to account for the prepaid insurance using the alternative method. Thank you for that thumbs up. I appreciate it. It really helps the channel, and we're trying to grow this channel and make it useful videos for people such as yourself. I've got a T account here for cash, and we have insurance expense. In our example here, we're told that the company immediately debited the insurance expense account for the $2,400. So I'm going to go to the insurance expense account and I'm going to debit, which is on the left-hand side, $2,400. That's the full amount of the prepaid insurance. We expense it all right away. We need an offsetting credit, and that is going to be cash because we've paid cash for it. There's no indication that they bought it on credit, so we're going to credit our cash account. In other words, we're going to reduce the cash account in the bank by that amount. So that is the first entry when this insurance is bought, and we can go ahead and show that in our general journal. So we're going to debit, and this is the whatever the date is. So I'm going to put in the first date, and we're going to debit insurance expense. And we're going to credit cash, and the credits are indented. indented, and it's for the $2,400. And you put some kind of explanation, purchase prepaid insurance. So I've got an explanation there of what it is. Now we come to the end of the period. Whatever it is, it appears to be, a couple months later, and there is $400 of the insurance has expired. In other words, it's been used up. Time has gone by, and in this case, it's a 12-month policy, $2,400. So that's $200 a month. So it appears that 2 months have expired of insurance. We're at the end of the period, so $400 has expired. That means if we started out with 2,400, let me go ahead and put it into my BA2 calculator here. If we start out with $2,400 worth of insurance and there's $400 left, $400 used up, if I subtract out the 400, that means $2,000 is left. So that means that we have prepaid insurance of $2,000. So this is the adjusting entry I'm going to make. The adjusting entry is I'm going to debit prepaid insurance $2,000 because that is the $2,400 that's been paid and there has been $400 used up. So I'm going to debit prepaid insurance, and this is an asset, so I've just increased the asset by $2,000, and I'm going to credit the insurance expense by $2,000. And since insurance expense accounts increase by debits, I'm reducing the expense account by $2,000. So that means we only have a balance of $400 in our insurance expense, which is correct. That's how much is used. And we have an asset sitting here of $2,000. That's insurance that has not yet been used up. We don't touch the cash account anymore with regard to this transaction because we already paid for the insurance. So we're not paying again. It was already paid. We're just using up $400 worth of the insurance. It's the end of the period. I debit the prepaid insurance and I credit insurance expense. Let me show you that as a journal entry. So we're at the closing date. You'd put the correct date there. I'm going to debit prepaid insurance. And again, remember that is a asset, and I'm going to credit insurance expense. And as we determined, that amount is $2,000. So it's again $2,000. Our debits and credits will now match. And we have properly accounted for this. This is the end of the period adjustment. And you might put in more detail here. Used $400 of insurance. Used it or it expired. However you want to do it, that would be an entry there. That as long as somebody can read it and understand what's going on, that is how you would account for it. If you like these forms, by the way, the T accounts and the general ledger accounts, I have a link down below where you can get your own. Just go ahead and get your own, and that way you can use them to do your accounting. I also have a program where you can become a member of the channel, and if you are, you can get some special members only videos and you can ask me questions and I can reply to you and maybe even create a video for you. So look into membership. There you can hit the join button down below and join at the appropriate level for yourself. And if anything else, if you found this helpful, please subscribe to the channel and hit that notification bell so you never miss a video. Thank you.